This is something that is even more recent than the Illumina news. United Health Group announced that it was going to leave the Obamacare exchanges all but entirely. What does
Yeah,
this mean?
I mean it's not a complete and utter surprise
Not at all.
because they communicated that they were going to have discussions surrounding exiting Obamacare.
Because they're
Um,
anticipating $1 billion of losses between 2015 and 2016 because of these exchanges.
yeah, they lost about I think it was over 400 million last year. They had came into the year thinking they were going to lose 500 million this year, and then in their conference call last night, they said that we think we may lose 650 million. It may not sound like a lot when you're talking about a company with 44 billion in revenue, but this is a very low margin industry. You know, if you look at their premium revenue of 34 or 36 billion, they're only, their earnings from operations on that business was only like I think 1.6 billion or something like that. Very thin margin business. So 650 million, I can understand why they want they want to rein in their exposure to that.
So, if you're somebody that's interested as an investor in United, does this change your thesis? I mean,
I don't think so. Do
is
you? I
Obamacare
mean,
even
do
a
you
big
think that
enough?
people aren't going to buy that stock now because of Obamacare?
No, I actually kind of think it's a good thing. Like, you're exiting something that was clearly not profitable for you. That's an example of the scientific method right there, is saying, you know what, we tried this and it didn't work.
Right. Keep yourself open to opportunity. I mean, other competitors in the space, they're not coming to the same conclusion yet, quote unquote, right? We don't know if they will eventually come to that same conclusion. The Obamacare exchanges they're expensive because you've got people who weren't previously insured. They're now starting to go out and get care. That care is expensive, and if you don't model for that correctly and you don't price your premiums correctly in the marketplace, well, you're going to lose money. And it's going to be very interesting to see how this plays out. I think that from a shorter term perspective, this is the right move for shareholders because it allows United Healthcare to retrench, reevaluate, and then slowly but surely begin to increase their exposure. You have to remember too that this company, they went from operating in just 4 states the first year, so 3 years ago, to 34 states last year. I mean, they expanded this extremely rapidly. It's hard for me to understand how they scaled it up this quickly without expecting there to be some problems.
Yeah, that's a good point too. I mean, it was kind of a quick ramp up, and it looks like a pretty quick ramp down too. But I actually do perceive that as a good thing, where the company can look at its decisions and say, okay, realistically, maybe that wasn't so smart. Let's backtrack a little bit here.
There are going to be parts of the country that are going to be more profitable for insurers based on how they design their patient pools. And I think that once UNH digests all the information that it's got now, it's going to have a much better chance of figuring out where those parts of the market are most profitable for it to participate. And those are the ones that'll stay in. And then as we go forward, maybe they'll start to fold in other areas in the coming years. Yeah, I think it's smart to retrench, think about where you're going, and then kind of roll it out from there.